Welcome back to the Tesla Daily News Podcast. Today is Sunday, December 21st, 2025. We're covering the biggest Tesla headlines that matter for the stock, a massive legal decision around Elon Musk's compensation, new signals on Robotaxi progress and regulatory risk, what we're learning from Tesla's innovation pipeline, and a couple of smaller but still telling demand and brand indicators. Story 1. Elon Musk's 2018 Tesla pay package is back on the table, and it's enormous. The hook is simple. Delaware's Supreme Court restored Elon Musk's 2018 CEO compensation plan that had been thrown out by a lower court. The context here is governance risk. For investors, this case has never been about cash leaving Tesla tomorrow. It's been about board independence, shareholder rights, legal precedent, and whether the company could face years more uncertainty. The details: multiple outlets report the plan was originally valued around $56 billion when it vested, and is now being cited as worth roughly $139 billion to about $155 billion, depending on Tesla's share price assumptions at the time of reporting. The plan involved roughly 300 million Tesla stock options tied to hitting aggressive multi-year operational and market cap milestones. The Delaware Supreme Court reversed the lower court's rescission remedy and awarded $1 in nominal damages. So what's the impact? Near term, this can reduce a major legal overhang that has weighed on sentiment. But it can also reignite governance debates, whether the board structure and disclosure practices are strong enough for a mega-cap company that's increasingly valued like an AI platform. Investors should also remember dilution optics. Even though the option grant is old, the market still prices in perceived dilution and headline risk, especially for a stock that trades heavily on narratives. Takeaway: the legal uncertainty is lower, but governance scrutiny is not going away. Watch for any follow-on shareholder actions, board response, and how large institutional holders frame the decision. Story 2. Robotaxi momentum is picking up in public, but the regulatory tail risk is also getting louder. The hook. Reports say Tesla's Cybercab concept, the vehicle with no steering wheel and no pedals, has been seen operating on public roads in Austin, Texas, and Tesla is also pushing unsupervised messaging around autonomy. The context is that autonomy is central to Tesla's valuation narrative. If Wall Street is assigning Tesla a software multiple, then Robotaxi progress, even incremental, can move the stock. The details from coverage: multiple reports describe Cybercab activity in Austin and reference Tesla's full self-driving work. Some reporting also contrasts this with earlier Robotaxi efforts that used Model Y vehicles and still included a human operator on board. The key point for investors is that Tesla appears to be testing closer to the product vision, not just the driver assist present. Now the other side. A separate report says a California administrative law judge ordered a 30-day suspension of Tesla's license to sell and make vehicles in California, tied to findings that Tesla's marketing around Autopilot and Full Self-Driving has been deceptive. And the judge suggested Tesla should rebrand Autopilot. Impact: even if that California report becomes delayed, appealed, narrowed, or modified, it highlights the core risk. Autonomy narratives can create demand and valuation upside, but marketing language can trigger regulatory and legal downside. California matters because it's one of Tesla's most important EV markets in the US and also a bellwether for policy. Takeaway: autonomy progress headlines can lift sentiment, but investors should track the legal and regulatory perimeter just as closely as the technical demos. Watch for Tesla's response, potential appeals, and whether Tesla changes branding or disclosure language. Story 3. Tesla's patent pipeline suggests a strategic shift toward AI and autonomy, and a slower pace in other areas. The hook. An analysis of Tesla's patent applications reportedly shows a slower pace of new patent filings over the last 2 years, alongside a shift toward AI hardware and software. The context is that patents are not the whole story, because Tesla also relies on trade secrets, manufacturing know-how, and rapid iteration. But patent mix can still be a useful signal about where management attention and R&D dollars are going. The details: the reporting frames Tesla's recent patent activity as increasingly focused on AI and autonomous driving, aligned with Musk's stated strategy of betting heavily on autonomy and robots. Impact: if Tesla's innovation emphasis continues to tilt toward software and AI, investors should be prepared for a wider range of outcomes. A successful autonomy platform could expand margins and recurring revenue. But if hardware innovation in vehicles, batteries, and manufacturing slows too much, Tesla could face more pressure from competitors in China and from legacy automakers that are getting better at EV execution. Takeaway: treat this as a portfolio shift inside Tesla. The upside case gets more platform-like, but the downside case becomes more execution and regulation sensitive. Story 4. A Tesla-only leasing and rental player is reportedly going bankrupt, underscoring depreciation and demand dynamics. The Hook, Dutch leasing company Mr. Green, known for running a Tesla-only fleet and betting hard on a Robotaxi future, is reportedly facing bankruptcy, with depreciation cited as a key factor. The context here is that leasing and residual values matter because they influence monthly payment affordability, fleet demand, and brand strength in the secondary market. If residuals drop, it can raise lease costs and reduce fleet appetite. The details. The report frames the collapse as tied to heavy depreciation and expectations that self-driving would transform vehicle economics. Impact. This is not a Tesla corporate financial event, but it's a market signal. Lower residual values can pressure pricing power. And when Tesla cuts prices, it can help new demand but hurt used values, which in turn can influence future leasing economics. Takeaway. Watch used Tesla pricing trends and lease terms into year-end and early next year. They can be an early indicator of whether Tesla is gaining demand through affordability or sacrificing too much residual value. Story 5. SpaceX buying Cybertrucks could be a small demand tell, but don't overread it. The Hook. A report claims SpaceX bought more than 1,000 Cybertruck units from Tesla. Context. Cybertruck demand has been debated since launch because the product is polarizing and production scaling has been uneven relative to early hype. Any credible signal of fleet-sized purchases gets attention. Details. The report claims a purchase of over 1,000 Cybertrucks, with some references suggesting the vehicles are seen at Starbase. Impact. Even if true, an internal ecosystem purchase does not prove broad consumer demand. But it can still help Tesla in two ways: near-term deliveries and visible utilization in harsh, real-world environments. That can support marketing, service learnings, and durability perception. Takeaway. Investors should separate three things: deliveries, sustainable demand, and gross margin. An internal purchase could help the first one, but we still need evidence on the other two. Story 6. Tesla is doing lifestyle and brand collaborations, and it's a reminder of how the company monetizes attention. The Hook. Tesla is tied to a limited edition pickleball paddle priced around $350 via a collaboration with Selkirk. Context. This is not going to move revenue. But it does show Tesla's continued ability to extend the brand into high-margin merchandise and partnerships, which can be useful when the company wants to keep mindshare during quieter vehicle cycles. Details. The coverage frames it as an engineering collaboration and a branding exercise. Impact. For the stock, this is mostly sentiment and brand heat. It's not material financially, but it's another data point that Tesla can sell premium accessories even when EV pricing is under pressure. Takeaway. Don't model this. Do note it as part of Tesla's broader strategy of staying culturally relevant, which can matter indirectly for demand. Let's wrap it up. Today's big themes are governance and legal risk getting clearer with Musk's pay package restored, autonomy making louder progress signals while also facing sharper regulatory scrutiny, and Tesla's innovation mix tilting more toward AI and software. On the demand side, watch depreciation and fleet economics, and treat any Cybertruck fleet headlines as interesting but not definitive. For tomorrow, keep an eye on any official Tesla response around the California license and Autopilot branding report, and whether additional institutional investors comment on the Delaware decision. If you want this breakdown every day, subscribe to the Tesla Daily News podcast and follow us for your daily, stock-focused Tesla update.